What's going on, guys? Good morning. Hold up. Market's almost at 5,000 here. Happy Wednesday to all of y'all. This is a great day. I think that there's a lot to uncover. There's a lot to talk about. So I'm going to get straight into it. No BS, no sugar muff puff. Let me start with SPX, get into NASDAQ, get into IWM, get into the 10-year, the VIX, the dollar, and then we'll talk about some sector rotations, after which we'll go through all of most of these tickers here. If you have tickers that you want me to break down, put them in the comments now, and let me have a look at them, okay? So from the macro standpoint, nothing has changed in the past few days. There's no developments in terms of macro situation. The only one macro situation that was in development, which didn't turn out to be much of a problem here, was the dollar, which saw a little bit of a run in the past 2 to 3 sessions, okay? And the past 2 to 3 sessions saw a mini pullback at the same time. On SPX, you can see on a much smaller time frame, 4 hour, we saw a little bit of a pullback, drawdown, whatever you want to call it, and then this pull down and drawback, as you want to call it. The market was a bit skittish, but more than anything, the macro interest rate perception data so far doesn't point to anything of a worry as of yet, right? For the NASDAQ, we have a very key moment here because it's been trying to break out of this shelf for a hot minute, and it looks like today is potentially the day that it might break out. And if it does break out, then you immediately want to pay attention to your beaten down IWM, okay? Your small mid caps that have been really underperforming the market. That's what you need to focus on in today's session, tomorrow's session, and the session for next week, okay? If you understand me and you understand what I have said, say okay, I understand. And if you don't understand me, I want you to tell me if you don't understand. This is a very important thing for you to come to a conclusion with, because it's really going to dictate your state of internal struggle mentally when you are dealing with your trades over the next few sessions. Does that make sense? If that makes sense, tell me it makes sense, right? I want to hear from you guys. So just looking at all this stuff here. So Joseph, I don't understand. Great. See, I love it. I love that you said that, because then this gives me the opportunity to explain. And now anybody else who is also in the same boat as you gets the benefit of understanding, right? So very simple kind of thought process, right? SPX has been a bit shaken by the dollar, but the NASDAQ remains strong. That means we are looking at tech businesses, or we are looking for the momentum, the boost, right, to come from tech businesses or the tech sector, which is on the verge of a breakout, okay? And if it's on the verge of a breakout, the one sector, or rather the one area within tech and SPX that has seen a lot of dumping in the past few sessions is the small caps, things like Affirm, right? Look at this dump, boom, right? It dumped from 43 to 38 within like 1 or 2 sessions, right? But look at it now, right? Look at it now. I'm giving you an example here, right? So Affirm is one of them. Then you can go find the rest, right? There's Palantir, there's so many others, right? There's Penn, there's Upstart, there's Chewy, there's so many, okay? You get what I'm saying. But look at Affirm here as an example, right? You have approaching the same kind of setup, resistance. These are the setups I love taking, right? And on the verge of breakout. Your guideline here should be 44.69. This is your 78.6 Fibonacci retracement level from this huge wave on the bottom here, okay? Where is the Fibonacci extension from? The Fibonacci extension is from this huge wave here to this top wave here. This is a retracement trigger, right? So as of right now, the 78.6 has been a very key level for rejection. Therefore, we need to cross over 78.6 rejection, which is 44.69, to establish new, fresh demand and upside buy limit trigger, right? You want people to start buying this, and that only really happens above 44.69, okay? So this is just one example of how I would use my newfound knowledge about IWM being lagged behind and then now gapping up pre-market a little bit, right? This entire thing will allow me to understand that, okay, now I need to start looking at small caps, okay? So that's one theme of the market that I will continually follow up with you guys on Monday or the next Wednesday, right? And if you have questions about this stuff, you can reach out to me, right? You know where to find me. You can either text me on Instagram, or you can join the Discord community for free and have access to the trading floor and all of the tools for 14 days through our website. Or you can message me on our Telegram group chat or the EGA broadcast, okay? So there's many ways you can reach out to me. There are no shortages of ways that you can reach out to me and ask me questions, okay? I will always be happy to reply and answer. So where do you think NASDAQ will break out to? Okay, so let's have a look at that, right? So I had my Fibonacci sequence for the NASDAQ drawn out quite a while back, right? And this is a big series wave, you need to understand that, right? See, the thing about Fibonacci's is some people be using them wrong. Now, I'm not trying to call out anyone, I'm not trying to victimize or attack anyone, but I'm gonna just keep it real with you guys and explain that some things in Fibonacci you can do and some things in Fibonacci you can't do. So in this case here, we're using this huge wave pattern here, which was a 1, 2, 3, 4, 5 wave up, right? And this is your A to B. So therefore, we are looking for extension targets up here, right? Your zero level kind of becomes the line in the sand, which is a major pivot point. And then these become your extensions, right? So if you count 1, 2, 3, 4, 5, this is technically an end of a 5-wave cycle. This is where a reversal could occur, or the next base for another upward cycle or a downward cycle. And that all depends on liquidity on the key pivot point, right? Which will be this right now, the 38.2, right? The upside target, though, is going to be 104, or if we really get extension wings, 61.8 golden pocket is at 18,610. Ideally, that's where the NASDAQ is definitely going to head to in the long term. But in the short term, we could have a corrective cycle, wave down 5 kind of cycle, right? The similar cycle like this, and then make another boost or run for the upside. Okay, so we have to be very, very aware of where we are in the market, in the macro term, in the short term, in the granular term. Okay, so for the day we are bullish, for the week we are indifferent, and for the month we are looking at a potential reversal and the downtrend movement. Agreed? Right? Does everybody agree with me? If you agree, say I agree, right? Now, so I want to keep you alerted about IWM, because this is a sector of the market that you need to be putting your eyes on, right? The small mid caps, you've been reading all the news articles about it, right? And I guarantee you that some of you are so sick of reading about the news articles about small mid caps being the play for this year. But here's the thing, when a lot of people read it, then they get into the mindset that it will not happen. And so they wait for a sign, and sometimes that sign can be too late, right? So we will, and it doesn't mean that we're going to take a stupid decision here and take the trade right now, right? All I'm saying is, I like to alert you a couple of days before something's about to happen, because it's useless to know what's going to happen after the fact, right? So I'm saying, watch this right now, right? Put your attentions on this. You need to allocate a specific amount of mental bandwidth per day during your trading session, right? And in those trading bandwidth allocations, you can't possibly fit in so many things. So this is one thing you should pay attention to, high key, the stocks within IWM, all the small mid caps. Okay, moving on. I don't want to be rambling. So next thing here is notice that consumer staples haven't really been able to push that hard. I have been looking at this for the past few days to see where is this actually going to start to cap off here. And the XLP, the ETF for consumer staples, as you can see, looks like it's running out of breath here, right? And if you look at the volume profile of this thing, right? Obviously not very helpful, but I assure you something. We can make this much bigger. Okay. Let's see. Okay, so as I was saying, a lot of the volume is concentrated around this area here, the same area where we stopped for a liquidity pit stop. Okay, I'm of the mind that I expect XLP to come down here to retest at least this if it intends to move higher. Okay, so I'm looking bearish on consumer staples for the short term. Short term, I'm looking bearish on consumer staples, but the sector that is likely to benefit of this outflow is consumer discretionary. And this is an interesting one, right? As long as we can clear above the 181, 182 level here, right? 182 is the perfect one. Let's just call it 182.50. We'd see a really nice upside, okay? And a potential for this to run much higher. Now remember, once again, don't get it twisted. Make sure that you go look at XLP holdings so that you can play the right companies, right? So when in doubt, use your best friend called Google. Search up XLP holdings, scroll down, click on the holdings, and you'll see the biggest weights are Procter Gamble, Costco, PepsiCo, Coca-Cola. The rest in the 4% and below you can ignore. These are the four that you should be looking, right, for a short position. Okay, XLP, that's for your consumer staple sector, right? And then you go through each chart, see which one's set up for the best one, right? And here's the solid. If you post one of those charts in either the Telegram or the IG broadcast, sorry, the Telegram or the Discord community, I'll be able to go through them for you and validate them for you, right? As for consumer discretionary, let me just, it's XLY, right? And have a look at the holdings of this one. Amazon is 25% weight, guys. Tesla is 15% weight, guys. Home Depot is all these are insignificant. So look at these two. These two make up 40 freaking % of this entire consumer discretionary ETF. Did you guys know this? Did you know this? Tell me if you knew this, right? This is why I say you got to follow the money sometimes. This is the research you got to put in, right? It's not just about charts, guys. Live outside your chart sometimes, right? There's a whole world of fundamental analysis, finding out stuff about stuff, finding out where that money is about to move, right? So rotation out of staples into consumer discretionary. Careful attention on small mid caps. And then the dollar index retracing down will give a boost to equities in general. The 10-year yield is just stuck in a limbo. We'll ignore this for now. The VIX moving further down, that's lower volatility, that's a good environment for bulls, right? So all of the things are pointing to continued upside so far. The only way this changes is if something happens overnight, market overnight risk, something like that, okay? Affirm, I went through this with you guys already. The next chart that I want to go through you guys with is Tesla. Hit that 180 even and got bought up pretty aggressively there. Next few sessions, or the 2 sessions after, it attempted to flush down again, failing to break again, and that level has now held as support. So if Tesla fails to break 175, let's just say, right? If Tesla fails to break 175, I remain bullish on Tesla. Okay? This wave down is way too stretched now. And so what I sense here might be a little bit of a move like this, and then it essentially moving back up over time. Okay? This together with the sentiment on flow that I saw yesterday has been quite promising for a potential swing trade. Okay, but more on the data later. I posted that for our private Discord members on the research report chat. Uber, remember Uber, which we were talking about as an all-time high discovery play. Look at where that got, right? We exited somewhere here at 68.37. But it's gone way up to $70. This would have been a multi 100% play, right? And we called it out right here just 2-3 weeks ago, right? Palantir, this one on massive earnings, it was up 30% yesterday by EOD, end of day. Now this one still has potential for upside, but I will not play it because everybody will be in there, and IVs are likely to be high. Baba, very nice run yesterday. There's a reason why I didn't play it yesterday, because I felt like the gap up and then the suckering up into the resistance, it failed the resistance. Initial day was selling off, was kind of weak, right? So I held off taking this long trade. But when I see a deep enough pullback here, I'll be happy to go long again. Amazon after earnings still in limbo, right? Nothing much to see here. And here's the funny one. How many of you remember this? Airbnb, right? We spoke about this how many, 1-2 weeks ago? Who remembers? I told you guys about the inverse head and shoulder, and there are too many eyes on this, and that it's likely to fake everybody out. Look at exactly what happened, right? Faked everybody the heck out. It came back down, right, all the way. And it doesn't mean that it won't go back up. It's just sometimes you gotta know when things are being watched so closely like this. This is such a textbook inverse head and shoulder. It's not always going to play out the way that you think it's going to play out, right? There'll be a funny little thing that happens, you know, here and there. So that's why I'd rather play the breakout at 150 and then take the upside later on after a rejection has been made. If it's a double top scenario, at least I get to manage my risk there. PayPal had the same thing, right? Inverse head and shoulder. You see that? Major fake out, right? And then pull back in, collected more liquidity, now starting to move up again. So a lot of these funny moves. Oh, Disney was the one, right? Disney was also a good setup, which we were talking about. It's been flirting with this level for so many days. Yesterday broke up, now today gap down, which gives me a nice entry here. So I'll be watching Disney for an entry today as well. So this kind of moves up into my pile today. Google's kind of at the end of it actually. The other one was Marvel Semiconductor and NetEase. I'm still watching these. Meta for a potential short, but I don't think this is going to play out as a short. I think this will be more of a long setup later. I just won't touch that. So yeah, that's all I have for you guys today. Any questions? Charts to review, tickers. Would be an example of that. What do you think next? Okay. I think I caught up on all the questions. But everything good? Was that easy to understand? If not, the replay will be up right after this ends. You can watch it again, listen once again what I'm saying. Yeah, that's all I have for you guys. If you have any comments or anything like that, drop them in down below. And also, go ahead and smash that like button right before you log off. Thoughts on Meta Gap after earnings? Yeah, I was just talking about that, right? I don't personally don't want to touch this right now. Personally, I'll wait for better, like a better structure. When stocks do something like this, like a huge monster move like this, you just forget them for a while, right? Forget them for a while. Same thing like Nvidia, right? Just take this out of your rotation of analysis until it starts, pulling back, making moves, right? I would just avoid this altogether. By the way, fun fact: if you want to play the exposure on small mid caps in a more risky way, guess what you can do to go long small mid caps and some mega cap, but high beta. That means high risk would be ARKK, right? But this is a very specific type of risk. So this is not directly in market theme, but it's on brand in terms of beta, high beta. Like the rest of them will be high beta too in small mid caps, but you need to kind of understand the difference. Like there's a different mood, the sentiment that's going in there. It's like the flavor, the spices of the meal, right? But yeah, Dylan, I absolutely agree with you. All right. Well, I'll see you guys back on next week's live stream on Monday. And yeah, any feedback about the streams? Are they okay for you guys? I can't even tell if my YouTube's bugging out. It's so buggy sometimes. Anywho's guys, have a great training session. I will talk to you guys back on Monday. Peace.